Don't buy this stock until you watch this analysis. We're going to see whether it's a buy or bust. The first metric is what I call the FOMO meter. It's how much the stock has moved in the past day as of this video. The higher the gains, the more people are willing to jump on the rocket ship and make some money. FOMO is a great way to scalp some profits if you're looking at the stock short term. Next, we're going to see if the business behind the stock is any good. We'll look at 5 metrics and grade them from an A++ to an F. In order, the PE ratio deals with the amount of speculation surrounding the business. If it's too high, it means too many investors are speculating on the price and overvaluing it relative to how much it earns. As low as possible is ideal. Earnings growth accounts for the next 5 years the business is slated to grow. Ideally, we want high growth, but that usually comes to a high PE ratio. But high growth means the company is still innovating. Profit margins tells us how efficient the business is at keeping what it makes. We also want this to be high. A high margin business is assurance that the business has pricing power and a brand name, which builds an economic moat. Return on equity goes hand in hand with profit margins. It tells us how well the company is using its money. You want a high ROE. This fuels higher profit margins, which increases growth. Then there's a dividend yield, which I believe is the most important metric as a long-term investor. A dividend enables you to generate passive income from the company. Cash straight to your pockets in order to fuel your other investments and your lifestyle. A higher dividend yield is ideal for any business you don't plan to sell in the next decade. When we put those 5 metrics together, we can answer the question whether the business is any good. A score of 0 means a failed business, and a 10 makes it a 1 in a million business. A score of 5 is considered average. This is just one of hundreds of other companies I've graded. If you want access to that spreadsheet, which is updated all the time, join my Patreon. Go to patreon.com/GrowthShares or click on the link in the description. Next, should you buy the stock right now, independent of the business? We all have different investment time horizons, so I split things up based on how long you plan to hold a stock. A short-term investor will look for a relatively low relative strength index, ideally below 30. The holding period of short-term investors are often a month or less. A near-term investor will look for a negative 50-day simple moving average, ideally as far negative as possible. The holding period for near-term investors are often less than 1 year. A long-term investor will not only consider the business, but also look for a negative 200-day simple moving average, ideally a very low number. The holding period for long-term investors are more than a year. Lastly, if you want absolute value, you can average out all 3 time horizons. This will ensure you're getting a bargain price for your investment. If you found this analysis insightful, subscribe for more. Invest wisely, and as always, take care of your money.